Ladies and gentlemen, welcome back to the channel. For the first time in this channel's history, I drew you a picture. Okay, before you get excited, being artsy is not a strong suit of mine. It looks something like this, okay? We're gonna get into it in just a moment. This is a very important video because this is not just the typical, I'm bullish kind of video. Because being a bull, the most important thing is acknowledging that you could be wrong. Okay? And I'm going to explain that here in this video, how I could be wrong, what we need to be vigilant for. Okay? Is this the time to panic? No. Absolutely not. Is it the time to be a little vigilant? What matters and what doesn't? We'll get into that here in this video. The reason I want to talk about this in today's video is because of Fed Bowman earlier. Fed Bowman, I literally put it in the Discord at 8:30 in the morning this morning. Something I tagged everyone. I said, Fed Bowman, really scary headlines coming out. It kind of took me back, okay? What's going on here? And I've noticed some of the weakening in the labor market in person. If you guys don't know, I partner with a restaurant, and we've gotten a lot more applications. But one of the things we've been asking is how difficult is it, or how difficult has it been to, get a job, right? Obviously, we hire these people, right, that we're asking this. And the responses that we are starting to get within the last, month or two are different. And I want to talk about that here in this video. It's important. It'll make sense. We're also going to talk about Tesla, specifically the rally that I still think is coming for markets, right? This is not where I flip-flop to being a bear. If that's what you take out of this video, you should probably stop investing, right? It's not for you. You're not cut out for this. And with that said, I want to get into today's video with, first and foremost, what happened today. Why did markets start off the day okay, decent, not a bad, not a great day, and then you ended up NASDAQ down almost 1%, Tesla down about 2%? What happened? What was the catalyst here that caused stocks to sell off? A lot of people didn't really understand. Okay? It was Trump. Okay, this is the only thing that matches or lines up. Trump says NATO countries should, quote, shoot down Russian aircraft if they enter NATO airspace. Says he thinks Orban would stop buying oil, and he says, quote, don't exactly know what happened in Denmark. So it was Trump saying that NATO should shoot down Russian jets if they enter NATO airspace. Obviously, that's a very dicey situation, right? And I think a lot of it had to do with algorithms. They're literally programmed to say or sell if shoot down Russia, Russian aircraft, anything in that same sentence coming from Trump is gonna cause a negative reaction, right? That's just a certainty. You mix that with September, seasonal weakness, boom. Not super shocking that the markets took a bit of a nosedive on that. But this is not really one of those catalysts that is going to cause real market weakness. Okay? It's just not. September, seasonally weak period. For brief moments, it could be problematic, cause stocks to fall, of course. What I'm really talking about is are investors going to doubt the bull market because of that statement from Trump? No. What is more worrisome is the labor market. Now, if you've been a viewer of this channel for a while, you know my view. The economy doesn't just go into a recession. Doesn't happen anymore. The economy is too big, it's too diversified. That's just not how things work. Okay. But if we have a catalyst, if we have a shock event, that becomes very problematic. That is something that could push us into a recession. So we have to be very vigilant of that. Okay. And even if we don't get a recession, if things start to look worse and worse, the markets are not going to like that. Investors are not going to like that. Okay. And what Fed Bowman said today sounded pretty alarming. And we'll get into that in just a moment. I drew you a picture though. Okay. Let's put this over here so everyone can see this. It's very simple. It's a little bar graph here. Okay. This left side in red, obviously, is things are really bad in markets, right? This is like recession, this is bear market, all of that. Down here in like the yellow and the bottom side of yellow, roughly where the arrow is, that'd be like a correction, right? You're not recession, you're not in bear markets, but there's a problem, or markets perceive there to be a problem. This arrow here is where I think we are today. This one. I have it under wait and see or mostly good. I think things are mostly good out there, but I think you are in a period of you want to wait and see. Like, in my view, this is not the time to go out and hedge a massive amount of your portfolio. Hedging portfolios, if that's your thing, you know, some people hedge all the time, right? Whatever, do what you do. This is not financial advice. I'm not a financial advisor, not a recommendation. Don't be a jackass, okay? Just don't be a jackass is really what it ultimately comes down to, okay? I like to hedge when I see a lot more risk. I don't think we're at that moment right now. But again, even as I know, the economy doesn't just go into a recession. Wall Street doesn't understand that. Wall Street says, okay, you know, labor market slowing down, recession risks rise. And maybe that's true mathematically on paper, but it's just not how the economy works. You need a shock event. You need a catalyst. You need an economical catalyst. What could that look like? That could look like a trade fallout with China, or a trade fallout with Europe or Canada or Mexico. That could mean a big company goes bankrupt. That could mean government shutdown, maybe? Big question mark. Okay. I think a government shutdown would definitely not be good in this environment. Okay. So, economic catalyst. Trump comments on NATO jets shooting down Russian planes. That sounds scary, but it has zero economical consequence, right? Off face value. Tier 1. Okay. So right now, I'm still 100% long this market. I have not a single hedge on this market. But if I start to see troubling signs, like if we start to hear that relationships, trade deals between the US and China are on shaky footing, I would want to hedge that. Okay. We are in September seasonal weakness until at least next Wednesday. Okay. But this goes deeper than that, right? Because you already do have the labor market that is weakening. The restaurant that I partnered with, joint venture, if you will, we're looking to hire. Things are pretty typical around us. But what we're hearing from people is that they're spending weeks to find a new job. And these are restaurant jobs. These are servers. These are cooks. These are pretty rotated jobs. They're not very stable jobs. People don't tend to work for years and years at the same job, right? In the same restaurant, doing the same thing, okay? Which is, you know, kind of troubling, right? But you're hearing it's taking weeks to get jobs, that You're not hearing back from as many people when you put in applications. Like if you put in 4 or 5 applications, you might hear back from 1. Okay. And it sounds like companies are being more hesitant to hire just the first person that comes through the door. Okay. And I'm hearing anecdotally from people that it's the hardest time to find a job that people have seen in years. Okay, that's what I'm hearing. Then you see comments from someone like Fed Bowman today, and let me just read you a couple of them. Fed Bowman said at 9:01 a.m. today, labor market could deteriorate fast in the coming months. Scary. Bowman says if demand conditions do not improve, businesses may begin laying off workers. Fed Bowman says, I'm worried the Fed is behind the curve on labor market weakness. Policy may need to adjust faster if risks materialize. Let me tell you now, this is just Fed Bowman, but if this becomes the Fed narrative and markets think the Fed is behind the curve, you're going to get some downside pressure in markets. Fed Bowman says, I supported a 1/4 point cut, but it's important that the Fed now proactively support the job market. So again, even though I'm not super concerned, I think things are going to get better from here, right? Specifically about midpoint next year, the no tax on tips, no tax on overtime, being able to write off car loan interest with lower rates. How could things not get better from here? Okay. That is assuming we don't have a shock event. If we had some kind of shock event, then becomes a much dicier situation. And that would be the difference between not hedging and hedging. Now, shock events that cause recessions are really only known in hindsight because by the time you're in a recession, you've already been in one for like 6 months. Okay. And I don't, again, GDP is like 3%. I don't think we're close to that. But the labor market is definitely in slippy slope territory. Okay. And it's something I'm paying close attention to. So I'm not like ringing the alarm bells, but hyper vigilant to the news flow right now because I don't want to be late to hedging. If we do have another correction or something, I don't want to be totally exposed to that. Now, as a base case, again, back to the pretty picture here, we are here. We are in wait and see or mostly good territory. If things do not get worse from here, if we don't have a shock event, which is the base case at this point, likely a 75 to 80% probability, maybe put a 10% chance of some kind of trade shock event, 10% chance things are way better than expected. Okay. Something like that is where I'd put the probabilities. We're going to have a very strong end of the year rally. Like, do not be confused. I still think Tesla is going to be a $500+ stock by the end of this year. Okay. But I'm saying things are not as okay as they were before. For an example, if we were to get April 2nd, trade announcements today, if that had never happened and the labor market was, like it is today, back in April, there would be no doubt in my mind that there would be a much higher chance of a recession than there was then. Back then, I said, yeah, if this lasts a long time, like it could be a depression, it could be a serious recession, but it lasted like 30 days. It wasn't long enough, okay? But even like a 30-day pause on trade with China again would be detrimental to the economy. Do I think that's going to happen? No, right? Do I think that Trump and the administration understands where we are at? Like the economy just can't handle that. The labor market cannot handle that. Yeah. Like I don't think they're retarded. Okay. And I think Trump wants a very good stock market. So again, that's what I'm saying. It's not time to panic. It's not time to sell everything. I don't even think it's time to hedge. It's time to pay more attention if you are an active investor. If you don't care what happens, if you don't care if your portfolio were to fall 50% in a worst case scenario, you're holding for 10 years, you're just going to buy more maybe in that circumstance, great. Don't pay attention, live your life. But if you're someone that's actively investing in this market, trying to maximize opportunity and get rich, it's time to pay a little bit of attention. Okay? But not panic, just a little bit of attention or additional attention. Now, for tomorrow, for Wednesday, your trading day, it's going to be a pretty slow day. You do have Fed Daily that will speak. You have building permits. The UN General Assembly continues, so we might get some comments there. Couple short-term bond auctions, 2-year bond auction, 17-week bond auction. New home sales, month over month and for August. But tomorrow could be a little bit of a slower day. Before we get into Wednesday, durable goods orders, month over month, GDP numbers for what? Q2 final numbers, existing home sales, and then Friday we have PCE, personal income, and personal spending, and final numbers for Michigan consumer sentiment. So yeah, get ready. And hopefully this, again, puts it into perspective. It's not time to panic. It's not time to run for the hills. It's time to be vigilant. This is not the time to be so perma-bullish that you don't realize where we are at. Okay? And that's the most important thing with being a bull, is you don't miss the red flags in front of you. You don't get that bias that just shuts everything out, right? And hopefully this video added a little bit of perspective to that. So let me know your thoughts down below in the comment section. If you want to come join the trading community, if shit hits the fan and we got a hedge, or if things are great into the end of this year, either way, I'm going to be prepared for it. We are going to be prepared for it. At least I'm going to give you a heads up. It's the best I can offer you. I'm not a financial advisor. I'm not a financial planner. You may make a lot of money. You may lose a lot of money. It is up to you to come to your own conclusions. Do the work, put in the due diligence, and come to that conclusion for yourself. Whether or not you want to invest in these small cap AI opportunities that I do, that is your choice. With that said, have a great rest of your day, and I will see you in the next one.